everyone. Hi. Hi everyone. Okay, I just want to double check if everyone can hear me. All good? Everyone good? Is everyone okay? I'm assuming all is good because I'm signed on YouTube as well and I can hear myself on my phone. So I'm guessing everyone is good. Um, I'm gonna give everyone else a minute or two to hop on and then we can start our webinar proper. Hey, welcome. Okay, I'm just gonna start and whoever's joining will probably join whenever, right? Whenever they're ready. Okay, so hi everyone, welcome to our Monday weekly forecast as we talk about the key fundamental news events to expect for the week ahead along with their technical setup. So we'll be highlighting key news events, central bank notes, and key support and resistance levels to watch out for. So this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We're an award-winning research firm and finalists in 2019, 2020, and 2021 for best forex and equity research. We work with major financial institutions to help them forecast where the markets are heading, and now we have a special partnership with Vantage Markets where we're bringing you guys the good stuff every day. So welcome to our webinar. I do see more people joining. Oh, there's already a like. Thanks for the like. Okay, let's move on to meeting the team here at Everest. So we've got Desmond, our CEO and Chief Trader. You've probably seen him before. He's taken you guys for these webinars, and you've got me, Cassandra. You guys can call me Cass. For those who don't already know me, a little introduction about myself. I've been trading for years. I'm a prop trader and an investment analyst here at Everest Fortune Group. So in terms of trading, I have been able to pass my forex fund and FTMO like 4 times already. So for those who don't really know what these are prop trading tests that requires you to do 10% in profit within the month and without having a drawdown of more than 5%. So I've done that consistently, and whatever I'm sharing with you guys today is basically my strategy or my way or our way here at Everest Fortune Group of how we get profitable trades and how we're managed to grow our account and be profitable month after month. Okay, let's move on to this disclaimer. You guys already know how this works. Disclaimer. This webinar, as you know, is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading, all right? So don't put your life savings into this because, again, another warning, trading Forex and CFDs carries significant risk and it's not suitable for all investors. So especially if you're trading on margin, it becomes even riskier. So if you are new here, I do recommend that you guys take it easy and please learn all the basics and learn all the stuff you need to learn before jumping into a trade. Do not jump into the ocean before learning how to swim. Okay, so do be careful if you are new to trading or if you're just starting out, or even if you are like a veteran in this, if you've been trading for years and years, you do still need to be careful, right? Just be cautious when you're trading. Okay, so let's start with the webinar proper. Okay, let's start with some market updates. So just give me a sec. Seems like okay, so what happened in the US session today? The US labor data came in mixed with headline NFP adding 420,000 jobs. It was expected to be 390,000, and it was previously 428,000. So while employment rate and month-on-month average hourly earnings deteriorated slightly. So employment change for Canada disappointed at 15.3 thousand. It was expected to be 39.5 thousand. That's like really off. Okay, that's like less than half. And it was previously 72.5 thousand. Okay, so what did that mean for the Asian session? The Asian session sustained offers on the antipodian, possibly due to the deteriorating COVID-19 situation in China and strength of the US dollars, are likely to present a bargain amid the relative hawkishness of from the RBA. So that's what happened with US, and that was what was expected from the Asia session. Um, Moving on, we've got the dollar index update. So the key news events, sorry, there are no major news events today. What can we expect from the DXY today? So the latest Fed speak reiterates the US central bank's aggressive path towards policy normalization. And the central bank notes that to confirm that the committee expects further 50 BPS hikes to the appropriate and 75 BPS hikes off the table. So balance sheets reductions to start with 30 billion in treasury and 17 billion MBS. It was pushed up to 60 billion treasuries and 35 billion over 3-month time frame. So the 75 BPS hikes off the table, saying the committee was not actively considering rate moves of that size. The next meeting you guys want to take note of in regards with the XY is on the 15th of June, which is in less than a week. Okay, so our bias for the XY in the next 24 hours is weak bullish. Okay, so we've got a weak bullish on the XY. Moving on, we've got the Japan yen. Oh, hey everyone. Okay, so if you guys do have questions anytime throughout the webinar, you guys can just ask. We're not just streaming on YouTube, we're also on Facebook and other destinations as well. So do ask your questions. I will be able to see all your questions no matter which platform you are watching this webinar from. Okay, yeah. So let's move on with the Japanese yen. There are no major news events today. What can we expect from the Japanese yen is that the latest minutes from the Watch meeting in March noted that members reaffirmed the ultra accommodative monetary policy approach. The members view that the economy recovery in the country would come from rising external demand. So the central bank notes that they kept all policy settings unchanged at their April meeting, reiterated that rates will stay low for the foreseeable future and won't hesitate to add stimulus if the economy needs it. So the next meeting will be on the 16th of June, which 16th of June, which is in a month or so. Okay, and our biasness for the next 24 hours is actually a week bearish. Okay. Okay, let's move on to gold. Okay, what's happening with gold? Gold, no major news events today. What do we expect from gold? Fundamentally, at least for today, is that gains on the previous metals are still expected to be kept by the trend of rising global interest rates, while losses are limited by the development of the war in Eastern Europe. So that being said, we are biased that it's gonna be mixed. We don't really have a bias at this point in time. We do think it's just mixed and would kind of range between a price range. We can look at that later when we move on to the live charts. But yes, it is a mix for gold. Okay, let's move on to the euro. Euro today, no major news events. What can we expect from the euro? Okay, so despite the relatively less dovish, slight hawkish, ECB speaks in recent times, and the euro bulls cannot follow through amid the prospect of a recession due to Russian-led energy supply issue in the EU. Okay, so central bank notes that plans to phase out the APP into Q3 remain intact by reducing purchases from 40 billion to 30 billion in May and then down to 20 billion in June. So highlighted risks for the economy outlooks are tilted to the downside and have recently intensified with geopolitical and virus related challenges. So the next meeting in regards to the EUR that you want to take note of is the 6th of June. That's happening in a month. Okay, our biasness for the euro is actually a weak bearish, so a mix to weak bearish, but overall we're more bearish on the euro. Okay, let's move on to the Swiss franc. Swiss franc, no major news today. Okay, what can we expect from the Swiss franc? Geopolitical escalation remains the key driver for the Swiss franc. However, the prolonged war in Eastern Europe may have exhausted bids for the safe haven currency. So the central bank notes that kept all policies unchanged as expected, more concerned with the real effective exchange rate than the nominal, and remains very dovish, in no way expected to change anytime soon. The next meeting you want to take note of with the Swiss franc is on the 16th of June, which is next month. And our biasness for the Swiss franc at this current point of time is mixed. Don't really have a bias of bullish or bearishness. Okay. The pound, no major news today. Okay, there's no major news events for today. What can we expect from the pound? The UK government officials are preparing to override parts of the Brexit North Ireland protocol in the coming weeks. So the central bank notes that a third of the 6 members who voted for the hike viewed that the latest increase marked the end of the current hiking cycle. So peak inflation revised to more than 10%, which added to the stagflation fears, possible GDP contraction in 2023. So quantitative tightening plans to be updated at the August meeting. Next meeting that you want to take note of with the GBP would be on the 16th of June, which is in a month. Okay, at this current point of time, we're a bit mixed with the GBP as well. Same with the euro, so just a bit mixed with our views, biasness. Oh, sorry. Okay, let's move on to the Australian dollar. So there are no major news events for the Australian dollar. The upcoming monetary policy, however, okay, they made a statement from the Australian Central Bank, is likely to reaffirm the RBA's gradual shift in the RBA's path towards policy normalization. So the central bank notes that stated that further increase in the cash rate will be required to bring inflation back in line with the target, announced passive quantitative tightening by stopping the reinvestment of maturing bonds. So the next meeting you want to take note of with the AUD would be 7th of June in a month, and our biasness for the AUD right now is a weak bullish. Okay, it is a weak bullish. Similarly with the NZD, we do have a weak bullish as well. There are no major news events today. So the thing about the NZD and the AUD is that it kind of moves in tandem. So if usually we have a weak bullish for AUD, we also have a weak bullish for the NZD. Okay, so what can we expect from NZD today? Amid a lack of first-tier data released and currency-specific news flow, the directional bias is likely to fall back on the overarching hawkish monetary policies from both the RBNZ and the RBA. So the central bank notes that stressed that inflation is a concern and will ensure that higher price pressures don't become embedded in longer term inflation expectations. Okay, so started that more hikes are needed but didn't increase their neutral rates expectation. The next meeting that you want to take note of with the NZD is the 25th of May. Okay, that's in 2 weeks. And again, we have a weak bullishness for the NZD. Let's move on to the loonie. No major news events. Okay, following what do we expect though from the Canadian dollar today? Following the disappointing employment change for Canada, the BOC may ease, albeit a little, the aggressive hawkish path that has been undertaken so far. Okay, the central bank notes that announced a start to passive quantitative tightening from the end of April by ending its reinvestment of maturing bonds. They increased their neutral rate estimate to 2.5% from 2.25%. Okay, the next meeting you want to take note of is on the 1st of June, and we have a weak bearish bias for the Canadian dollars. Weak bearish bias. Lastly, we've got the oil, crude oil. No major news events. Okay, what can we expect though? Saudi Arabia lowered its June oil prices to Asia and Europe, but kept rates unchanged for the US. Okay, on the Iran nuclear deal, the country's officials stated that negotiation remains on the table via messages despite the suspension in Vienna. So our bias for the next 24 hours in terms of the crude oil would be a mixed to weak bearish bias. Okay, that's all I have for you guys for today in regards to our news update. We're gonna move on to the live charts. I think this is where you guys get excited more. You guys are more excited for the live charts because this is when we look for setups, we look at our strategies, and we can analyze some charts. So if you guys do have any chart requests, any particular pair or any instrument you want me to look at, just drop it down in the chat box and I will try my best to look at those pairs immediately. Okay, we've got some requests coming in already. I don't know which platform you guys are requesting this from. We've got a request on gold. I'll be very honest with you. I looked at gold a while ago and it didn't look amazing. If anything, I couldn't find a bias for gold, but the one that we can look at later on is actually GBP CAT. I did see a bearish sell. There was an entry for a sell. Probably if it's still there, you guys might still be able to consider it. But at this current point of time, I don't think gold will make it. We can look at it anyway still. Okay, so again, thank you so much for staying throughout the news part or the market updates part. I hope you found it useful in equipping you with the knowledge to trade for the week ahead. Let's move on to the live charts. Okay, I just want to find out from everyone if you guys can see my charts. Everyone good? Everyone can see my charts? All right. Okay. Let me just double check on my side as well. I myself am logged in on one of the platforms and I do see the charts, so I'm assuming the charts is showing up for everyone else. Okay, so let's go straight into GBP CAT. Okay, I did see a sell earlier on. Yikes. I guess the sell already played out, so I actually called for an entry from here. Oh, sorry, this is the weekly charts. This is the weekly charts. I was looking from the 4 hours. Yeah. So it looks like it's already on the way down to the take profit, but if it does come back and retest a little, you can consider getting in. So one thing I want to start with GBP CAT is that we need to establish its trend for sure. So on the get-go, right from the get-go, I can see that it's on a downtrend. It's definitely on a downtrend. If anyone sees an uptrend, please let me know. Right, I only see an downtrend. So there's a downtrend right here. That's on the bigger time frame, which is a daily. We're going to look at the 4 hours. So on the 4 hours as well, I do see a downtrend. If you guys see any other directions, do let me know. So once I've established my downtrend, it's like I find that you've already won a lot of the battle, because by establishing what the trend is, whether it's an uptrend or a downtrend, you can kind of now look for a buy or a sell, right? So because it's a downtrend, we're looking for a sell. We're looking for a sell because we don't want to go against trend. We do not want to go against trend. Okay, I'm gonna get rid of that. I was just trying to see if there was a Nike tick. So now that we've established it's a downtrend, we're gonna try to spot if we see a channel or some kind of descending trend line. I do think there's possibly a channel here. Maybe not the best channel, but we can try to highlight it. Okay, there is a descending channel. So whenever you see a channel, it just means that price is expected, or at least forecasted to continue moving within this channel. Okay, so at this current point of time, with only the information of the channel, I'm still biased that it is bearish. So the thing about technical analysis is that the more information you collect, the more probable your trades will be. At this current point of time, just using the channel, I'm biased to the bearish side, right? Because clearly the channel is saying the channel is on the downtrend, it's a descending trend line. But later on, when I add in more things, when I use more tools like support and resistance, Fibonacci levels, if I manage to find Fibonacci confluence, if I manage to find if I add in like indicators, if I add in more levels and whatnot, my bias might change. So just based on this one information I have, I am biased that it's bearish, but it doesn't mean I will be bearish by the time we get to the end of this analysis. Okay, so we've got our trend, we've got our descending trend. Now let's look for support and resistance. Okay, so support and resistance is always below or above current price. Okay, it's always below or above current price. Current price is right here where this green candle is right now. Let me zoom this in so that it's bigger for you guys. I don't know if you guys are watching this from your phones or your computer, but yes, we're gonna zoom in so it's clearer. Okay, we're gonna highlight some levels. First, the resistance meaning the level below current price. Sorry, the support is the level below current price, and resistance is the level above current price. So there's a resistance right there, and that was where we would have been able to enter for a sell. Okay, we would have been able to enter for a sell here. This is what I found earlier on in my earlier webinar. Okay, but looks like you guys miss it, we're still gonna highlight this in case price comes back to a better position, and you can consider entering still for a sell. Okay, you can consider still to enter for a sell position. Okay, now that we found our support and resistance, the next thing we want to do is look for Fibonacci levels. Okay, we're going to want to look for Fibonacci levels to see if there are any levels that lines up with our support and resistance. So I'm going to change the name of this to resistance, and I'm going to change this to support so that it's clearer and you guys know what I'm talking about. Okay, so now that I found support and resistance, I want to find Fibonacci levels that lines up with that support and resistance. Why am I doing this? Because I want to kind of measure or see how strong the support and resistance is. So the more Fibonacci levels lining up at my support and resistance, the more like the stronger or the more significant that level is. So if it's a very significant level, it just means when price gets here, it will have a hard time breaking, and then it will just reverse from here. Okay, so back to the Fibonacci level, I'm just gonna grab from this swing high. We're gonna pull out all our levels. Why we're doing that? Because we want to see which level is closest to our first resistance. It's the 38.2. So we're gonna go back into the settings. We're gonna get rid of everything other than the 38.2. Okay, we're only gonna leave the 38.2 because all the other levels are not relevant to us. We can possibly leave the 50% to see where our take profit is. Sorry, our stop loss is. But other than that, all the other levels are not relevant. So at this current point in time, I am still biased that is bearish. Okay, let's see if I add more levels. So let's add in a Fibonacci projection. Okay, let's add in a Fibonacci projection. Just give me a moment. Okay, I'm going to get rid of that 50%. I'm going to pull out the 61.8% because they're more. The 61.8% would line up better with the 100% Fibonacci projection. But let me just check if it would have lined up with the 78% as well. Okay, yep. Sorry about that. I'm going to remove the projection. Okay, so why I'm also highlighting this level right here, even though there's no horizontal levels or horizontal support resistance, is because later when we're looking for a stop loss, because right now we know where our entry is, we know where our take profit is, we need to know where our stop loss is as well. So our stop loss, just place it above these two Fibonacci levels because this is a level where there's confluence, right? So when there's confluence, it means price will also have a hard time if price were to get here, it will have a hard time breaking because it needs to break two Fibonacci levels before it can go upwards. So if it's going to have a hard time breaking, it means it's going to come here and reverse. Okay, on top of that, if it does come here, it needs to break these two Fib levels. It needs to break this descending channel before it can even reach your stop loss. Okay, so that's the reason why I'm leaving those levels there so that we can use it as a reference of where we're going to put our stop loss to. Okay, so next, now that we found our Fibonacci levels, I want to see if I can find more levels actually. So I'm going to grab this swing high here to this swing low to see if anything lines up. Okay, the 23.6 lines up nicely. Okay, we can... Yeah, I'm going to leave that. I'm going to see if there's a Fibonacci expansion as well. Okay, nope, no Fibonacci expansion. We're going to get rid of that. So at this current point of time, we found three levels lining up on our first resistance. And this is where we're going to put our stop loss just above this two confluent area, right? The thing about this trade is that the entry would have been best here. Okay, it looks like it's already on its way to the take profit, but the thing is price could just retrace. If it does retrace or come back to a better price, let's say the green candle closes somewhere above here, it's getting closer to our entry, and you might be able to consider another entry for the sell for this trade. Okay, that's why I am still highlighting levels even though it looks like price is already moving. So now that I found my entry, stop loss, and take profit, I want to see how far I can try to play this to. So the same with using fib levels. We're just using Fibonacci levels to project where we think price is going to go. Okay, we're just gonna use that to project where we think price is gonna go. That looks a little far. I mean, if you're being very conservative, very conservative, at the minimal, you can try to play it to this swing low here, right? You can play it to the swing low here. I mean, it's a nice horizontal level. Price came here twice, bounced. Price came here and bounced the second time. Okay, it's a nice horizontal level. I would consider it a key level. So the thing about price is that price is attracted to key levels. So whenever there's a key level nearby, price seems to be attracted to it and want to go towards it. Okay, if we're using this as a reference, I do think it's possible that price will go into this first resistance. So on a very conservative base, if you're being very conservative, you can play it to this swing low. If not, I'm thinking, let me see how far more you can play it to. Okay, I think conservative, we can just try to play it to this swing low and not aim for more at this current point of time, because there's not much information at the sides. When I'm looking for my trades and my setups, what I always prioritize is always horizontal levels. So I always look at horizontal levels first before I make my decision. Okay, I can probably use like Fibonacci levels to get a better take profit, but I think the stop loss is good enough. Let me grab the measuring tool. So if you were to enter for this trade, right? If you were to enter for this trade for a sell, it will be a 1 to 2 kind of trade, right? So that's not too bad. I think that's not too bad. You guys can consider it. Okay, but only if price comes back to a better entry. Okay, only if it comes back to a better entry. Otherwise, no. Don't even consider getting on to this trade. Okay, that's that for GBP CAT. If you guys have any other requests, you guys can throw it into the chat box right now. If not, I do think since GBP CAT is showing such a nice clear movement, I think maybe we can go to other GBP pairs. Okay, we can look at GBP AUD. GBP AUD would probably be able to tell us something as well. Let me just take a quick look. Okay, maybe not GBP AUD. AUD ended D sometimes has really nice trades. Okay, we can highlight some levels, right? We can highlight some levels with this, but not. It's not. I can't confirm that I'll be able to find something good with this. So AUD and ZD. Let's start off with the daily charts first. Okay, let's start off with the daily charts. We've got, again, we're starting off with the ascending trend line. We're always starting off with looking for trend line. Okay, so why we're doing that is because we want to see our directional bias. So I do have a directional bias at this current in time. It is bullish. Okay, that's not the best ascending trend line. Not the best ascending trend line, but it is touching. Why I say it's not the best? Because current price is not exactly reaching, has not recently retested this trend line. So there's a possibility that this trend line isn't that effective after all. Okay, the other possible thing I see with this charts may be an ascending channel. Okay, it could be an ascending channel. If that's an ascending channel, it looks like it broke already. Okay, no, it didn't. Just give me a sec. I'm trying to adjust. Okay, so depending on how you draw your channel, it may look like this is a break. Okay, there is a possibility this looks like it is the break of the channel. So if it's a break of the channel, usually after the break, you wait for the pullback, which is right now. There seems like there's a pullback right now, and then you enter for the buy. So even if this is a break on the upside, I won't really be questioning it. Whether this is a break or not, I won't really be doubting it, or I won't really be doubting it. Why? Is because price is on an uptrend anyway. So even if I do have a bias based on this break or not break area, at least my bias would still be the same of what my directional bias would be. Okay, so let me see if I can draw this channel a different way. Okay, to if I draw it a different way, would it still give me the same results? Okay, not really. So the best way to draw the channels was actually this way. Why is this the best way? Because for a channel to be valid, you need two touches on top and two at the bottom on the minimal. Okay, if there's more, that's fine, but on the minimal, it needs to have two. So in this case, there's three touches at the bottom and two touches at the top, if not three. Okay, let's change the line chart to, okay, no, it's two. So it's two on the top and three at the bottom. So I would consider this a valid channel, and this may be a possible break. Okay, why I say it's a possible, why am I not confirming it? Because sometimes it is possible that fake outs happen, right? So we don't want to get confused. Okay, we don't want to get trapped. I think the word is trap here. We don't want to get trapped. Okay, I don't want this to be a fake out. A fake out meaning that it breaks and then comes back in to that channel in the end of the day. Okay, I want this to be a confirm break and retest. Okay, to retest that, we need to back it up with other things. Okay, the more things we back our bias with, the more probable the trade becomes. Okay, the more probable the trade becomes. So let's pull out our support and resistance because we've already got our directional bias. It's definitely bullish at this current point of, and a longer term, it's definitely bullish. Let's pull out support and resistance. We've got one support here and resistance right here. Okay, that looks very small. It looks like it's only three candles. It looks like it's only three candlesticks, right? But the thing is, we are not trading the daily charts. We're using the daily charts to collect data or collect our information, but the place on the charts or the time frames, the time frame that we are using to get in on the action is actually on the 4 hours. Okay, it's actually on the 4 hours. So that's why sorry, just give me a sec to analyze this. That's why it's fine if on the daily it looks like it's such a small movement. On the 4 hours, it will a bigger movement. See, like now that we're on the 4 hours, it looks like it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's like 16 candles, which is like times 4. That's let me see. Wow, I'm really bad at math. okay, that's like 64 hours, I think, if I didn't calculate it wrongly. That's like 64 hours, which is like close to 3 days, actually. It's close to 3 days. So on the daily, obviously, it's going to look like it's only a few candles, but on the 4 hours, it actually took like 16 candles and like 3 days to get there. So if you want to consider this trade, it is possible. You can consider this trade. Let me try to look for a better channel, because now that we are here, the channel doesn't look that great anymore. Okay, the channel does not look great anymore. Okay, regardless, let's just use the horizontal level and use the channel as a bias of price being on a bullish uptrend. Okay, so that's the only thing we're going to use the channel and the trend lines for. But more importantly, I think is actually the horizontal levels. Okay, it's actually horizontal level. Okay, so are we clear about this at this current point of time? Everyone good? Everyone good? Okay, cool. So now that we've got our support and resistance, what you want to do is look for bias. So at this current point of time, immediately I'm biased that price is gonna do this, right? I'm biased that price is gonna do this buy from here, and this would be the take profit, right? Just give me a sec. Okay, I'm gonna get rid of this. Now that we've got our bias, again, we need to back it up with Fibonacci levels. Let's just change this to first support, as let's just change this to first resistance, okay? Because resistance is always above price and support is always below price. So how I establish where to place my first resistance and first support, my support and resistance, is to either place it at the body of the candle or the wick of the candle. Okay, you can either place it on the body of candle or the wick of candle. For this case, I'm going to place it on the body because this body would line up 1, 2, 3, 4, 5 candles together. Okay, making me think that this is the area that price starts to reject. Okay, this is the area that price starts to reject. Okay, so if price were to move and come to our first resistance, go above it and close, okay, close above our first resistance, it would kind of give me a signal or like some kind of indication that price may have broken this area and there may be a possibility of further uptrend. Okay, because based on this 1, 2, 3, 4, 5, 6 candles, based on these 6 candles, this level seems to be where the body is. Okay, this level seems to be where price rejects or wicks and closes below the most. Okay, so the candle seems to be closing below this level the most. Okay, so that's why I'm placing my first resistance there. Okay, now we're going to look for those fib levels that we were talking about. Let's pull it. Okay, we've got the 38.2. You can see how the 38.2 kind of touches this swing low here, and it also touches this previous swing high here. So this is called a pullback. Okay, it's called a pullback. I'm gonna highlight this level, okay, this pullback level, because you guys have to remember that support and resistance is not one horizontal level. So it's not just one price, okay? It's not just one price. It can be a zone. If it's one price, if you pull out all your Fibonacci levels and they all line up in the same area, then that's perfect. Okay, but more often than not, it is not one price, it's actually one zone. Okay, so it's actually a zone. So we've got our 38.2 area. Let's pull out more fib levels below it to see if anything else lines up. Okay, why am I pulling out more fib levels? Because although there's a pullback here, I need to acknowledge that there may be a stronger zone here at the 50%. Why do I say that? Because price came here so many times and there's so much wicking and there was so much action going on here. So price came here, reverse. Price came here, reverse. Came here the third time, reverse. Came here the fourth time, reverse. Came here the fifth time, reverse. And on the sixth time, it broke. Okay, so all this price action happening in this red area here makes me acknowledge, okay, I'm going to acknowledge that this was a key level. Okay, it was a key level. It may not be a key level anymore, but it's too early to say because price didn't try to come here again. Price has not come here again, has not fallen to this level again to retest this area. Okay, so I'm just going to take note that previously price was having a hard time breaking it. Okay, this one I'm going to highlight. So I'm going to name this our second resistance. Name this our second support. Sorry, not resistance, our second support. I'm going to name this our second support, and this is where I think price might bounce off. It looks like it already bounced off. If it comes back a second time at a better price, that may be your opportunity to get in for the buy. Okay, may be your opportunity. I'm not saying it's confirmed because you need to wait for candlesticks confirmation to get in for that buy. Okay, where I'll put my stop loss, I'll put it right below the second support. Why am I putting there? It's because I do think that this is a significant key level. So if price does come down to this key level, I don't expect price to break it. Instead, I expect price to reverse from here. Okay, because price is usually attracted to key levels, but it doesn't mean it has the strength or the ability to break those key levels. Okay, it's just attracted to those key levels. Okay, hold on. I do still see more people joining. That's really all. We're almost done with our webinar and you guys are joining now. Okay, doesn't matter. Welcome to our webinar. Again, reminder, you guys are not all on YouTube. There's Facebook and other platforms streaming this as well. So if you guys have any question, just type it in the chat box. No matter which platform you are on, I will be able to see your conversation or your questions on my side. Okay, so don't be shy if you have any questions. Okay, so this is my probable stop loss. This is my probable entry, and this is my probable take profit. Okay, where's the take profit? There you go. Probable take profit. It does look like price already came down and did that bounce, but if it comes back again, right, there may be a possibility of another entry for a buy. You need to wait for candlesticks pattern. Okay, so let's see if there are other Fibonacci levels lining up in the same area. They are. So the 61.8 lines up nicely with our buy entry. The 78.6 Fibonacci projection lines up nicely with our stop loss. So it just means that this could either be the entry for the buy or this could be the entry for the buy. But I'm more inclined to believe that it's here because it looks like it's already bouncing already. Okay, let's hope price comes back down. If it doesn't, it's totally fine. We'll just take it that we missed this trade. Okay, we'll just take it that we missed this trade. Give me a sec. Let me just change this. Okay, now that we've got that, what's our last step? Our last step, as usual, is to combine our analysis with indicators. So we're gonna combine all of this with indicators. Sorry, I'm looking for the arrow. I am having a hard time looking for the tools. I I don't know about you guys, but after having COVID twice, right? Oh wait, yeah. After having COVID, I actually get brain fog once in a while. So I know what I'm doing. It's just that I pause in between and then I proceed. I catch myself and I proceed. So yeah, there was sometimes I have nowadays I find I have a hard time looking for tools on TradingView, which is so funny because I've been using these tools for years. Okay, that's that. I think this is okay for a buy at this current point in time. Let's back it up with indicators. Back it up with indicators to see if the indicators are saying anything. Okay. If we're going based on Fibonacci, we've got a problem. Okay, we have got a problem. So what is the problem here is that Fibonacci, how Fibonacci works is that price, I'm gonna go into the settings and get rid of everything else other than the conversion line, baseline, and the background. Okay, so why I'm leaving this is so that the charts is cleaner and it's easier for us to find our analysis. Because if it's too messy, you'll have a hard time. Like you'll get confused. It'll be very hard for you to comprehend. Even for me, even sometimes when I chart and I forget to remove levels, it's just so messy. It's so hard to even see what I'm trying to say. Okay, so that's why I'm always removing stuff I'm not using. Okay, so how I use the Ichimoku cloud is that price needs to be above the cloud for it to be bullish. Okay, if price is below the cloud, it is bearish. Okay, this blue line, which is called the conversion line, has to be above this red line, which is called the beige line. Okay, for it to be bullish. If the blue line, like right now, has cut through the baseline, it is indicating bearish. So the problem here is that although price is above the cloud, the blue line has just recently cut through the baseline, which is the red line, which is an early indication. Okay, it doesn't work all the time with the Ishimoku, but it is an early indication of trend reversal. Okay, it's an early indication of trend reversal. So I'll give you guys an example of that happening. There's one right here. There's one right here. You can see the blue line crossing the red line, and what happened, price started to drop from there. So although it's not accurate all the time, I would say it is quite accurate. Okay, I won't say it happened like 10 out of 10 conversion line crossing the baseline means that it's trend reversal, but I do think more often than not. Okay, another example is right here. You can see the blue line crossing the red and price just goes up. Okay, so this is a concern. This is a concern that there is a possibility that this may be the start of a downtrend. Okay, another thing that I did not see earlier, is that there may be an ascending trend line breakout. Okay, so let me see if that. Okay, there is an ascending trend line breakout. Let me see if I can draw this better. Okay. Immediately, my buy does not look like a buy anymore, and it looks like a sell. Okay, that's why I was telling you guys at the start of the webinar that just because my bias in the beginning may be sell, it doesn't mean after collecting more information and using more indicators and using more things, it's not gonna turn to another bias. Okay, so based on horizontal levels and based on directional trend, I was biased that price was going to go up. But right now, when I pull out this ascending trend line, it looks like price broke this ascending trend line, is now retesting, and there's a possibility price might just go down from here. Okay, there's a possibility that price might just go down from here. Okay, so on top of that, Ichimoku is also suggesting a trend reversal. Let's see what Stochastics is saying. For stochastics, the settings that we use is 21, 5, and 3. 21, 5, and 3. At this current point of time, it's not really saying anything. Okay, stochastic is not really saying anything. Price is just in the middle. It's not really saying anything, so we're not gonna use that. How I usually use the RSI is I look for descending or ascending trend line. I do see a descending trend line here, which is indicating bearishness. Okay, on top of that, there is some sort of divergence here. Okay, so you guys can see, although that this is bullish, okay, on the MACD, it's indicating bullish, but you can see that the bullishness is on a downtrend. That means the bullish strength is weakening. Okay, so it used to be quite bullish here, and then it gets weaker and weaker and weaker, and now it's turning red. Okay, so if anything, based on divergence, I think there will be a trend reversal, and this might actually just end up being a sell from here, right, where price actually is right now. Okay, this might be a sell from here, not to our buy entry. Okay, sorry. Your buy entry can be your first take profit. The buy entry can be your first take profit. So now we're changing our bias. Okay, but because I do think there is divergence. Okay, I do think that is divergence and we shouldn't be going against that. Okay, I'm going to change my stop loss to above this swing high and this swing high. I'm going to play it all the way down to either here. I change it to take profit. Take profit. Okay. Either to this level here or here. Okay, either to one of this level here or here. I do think these indicators are signaling a short-term bearishness. Okay, am I going to get into this trade? Personally, I wouldn't get into this trade. You can get into this trade. Why I don't want to get into this trade, okay, is because when I mean, this is just my style of trading, right? If your style is your style of trading does not prioritize support resistance, horizontal support resistance, you can consider getting into this trade for that sell. Okay, so when I look for a trade, usually support and resistance or price action is my priority when looking for setups. Okay, so initially when I was just using support and resistance, I was using directional biasness and whatnot, it was a buy. But because all of these indicators, the RSI, the MACD, and Ichimoku is showing me divergence and a possible trend reversal, it's totally going against what I'm used to. It's totally going against my strategy. Okay, so I can do one thing now is one, I can ignore the three indicators, okay, and just go in for the buy. Or two, I can take note of the indicators, don't go in for a buy. Or three, I can take note of the three indicators and get in for a sell. Okay, but the problem with getting in the sell is that I think using indicators to trade should be your last priority. Okay, your first priority should be price action, support resistance, directional biasness. I mean, that's how I trade, directional biasness and whatnot. And indicators, okay, is always the last thing I use to make my decision. So right now, if I do get in for this sell, the only thing is backing me up are three indicators, and this possible horizontal level here. Okay, possible horizontal level here that doesn't look the best. Okay, let me see if there is something lining up there. Yep, there should be a 50%, 61%, 50% lining up there. Okay, so there's this horizontal level lining up here. You can play it down here or here, but in the long run, I do still think that it is bullish. Okay, I do think that AUD NZD is long-term bullish, short-term bearish. So you can you may be able to consider this short-term selling, very short-term entry, but let me see. Yeah, you can consider that as a short-term sell, but ultimately I am still long-term bullish for AUD entity. Okay, thanks guys for attending our webinar. Do like and share this webinar and this video. It will help the algorithm so much, and Vantage will be more than happy to let us continue with these webinars for you guys. Okay, so do like and share. I will catch you guys I'll catch you guys tomorrow actually. Oh no, sorry, Thursday. I'll catch you guys on Thursday. So I'll see you guys on Thursday. We're gonna do live analysis. We're gonna look for setups like today, except we're not gonna go through the market updates and news. Okay, so I'll catch you guys then. Thanks for